Hi there, this is Andre. In this video, we are going to talk about the brand new ranking table. And I'm going to show you exactly how it works by replicating the underlying logic in a Google Sheet and going step by step. So the ranking table is a kind of a screener in that it helps us identify possible trading positions. It works differently from a screener because think of a screener as a slicer. A screener definitely eliminates a certain subset of stocks based on certain considerations. A ranking table it works more like a blender. It takes a couple of metrics that we can see here on the left side, and it creates a ranking based on importance scores. But what I wanted to show you in this video is exactly the step-by-step workings of this logic. So first of all, let me make myself smaller, and let's say that we are working with this exact subset of stocks: Eli Lilly, Nvidia, MasterCard, Broadcom, and Visa. And we have considered the price to sales for these particular stocks. Now, what our system does, it takes these stocks and their price to sales, and first it organizes them so that the stock with the highest price to sales is at the top and the stock with the lowest price to sales is at the bottom. Of course, this is replicated here for the top 1,500 stocks in the stock universe by dollar volume. So it's not just a small subset of stocks. Then it creates a ranking so that the topmost stock has the highest ranking. So this is how it looks like. And of course, when we have 1,500 stocks, the topmost stock is going to have rank 1,500. Then comes the importance score. The importance score is what you are defining over here and what our models already have predefined, as you can see in the data frame over here for every model. But when you click on new ranking, you can define the importance scores for yourself. Now, the importance score is the same for every stock. So you can see over here that every stock has a certain importance score, and you can define it. I usually use numbers from 1 to 20, but you can use whatever numbers you want. Obviously, the higher the importance score, the more weight that particular metric is going to have, and the final score is computed. Now, for each metric that has a non-zero score over here, and by the way, the score can also be negative if you want to, for example, penalize a metric like price to sales. So if you want to get more cheaper companies, every metric is taken into account and the final score is added with the score from the previous metric. So the final score is actually computed from the multitude of metrics that are calculated in this way. Finally, when you have entered, so for example, if you want to kind of replicate this table, we would create market cap, price to sales. I'm going to weight them all at 10, and maybe free cash flow per share. And I would get a ranking. You can see that the score is already in the 4200s here, and we can already have some of the shares that we have here as a very high in the ranking. The idea is that we can then limit the score. So for example, if we want to only get the first 10 stocks, we would limit the score to 41,050. Let's do that over here. And now the table is going to only contain the top 10 scores using this ranking. And if we scroll over here, we are going to see a combined equity curve, which is not exactly like a backtest. It's what this portfolio would look like on a buy and hold basis. So it kind of looks like this. And if we would like to get a backtest, if you would like to get a backtest, all you have to do is take a screenshot of this ranking, send it to us, and we will create a true backtest. But the equity curve gives you an idea of how this subset of stocks is currently performing, not necessarily how the logic would work in a backtest. It really depends, of course, because we can rebalance every week, every 2 weeks, every month, and the results would be different. But in a very quick way, This is how the ranking table works, and this is the underlying logic from our Millennium portfolios. Okay, if you have any questions, of course, feel free to reach out, and yeah, enjoy.